Innovator accelerated ETFs are part of the Innovator Defined Outcome ETF family and the world's first ETFs that provide multiple on the upside of an underlying single exposure like SPY and QQQ to a cap with single exposure on the downside. We believe that this is amazing news for advisors. You can now get 2-to-1 on the upside to a cap and only 1-to-1 on the downside. In other words, investors now have the potential to outperform the market without any increased risk on the downside over the outcome period. Innovator is planning on launching our suite of accelerated ETFs based on SPY and QQQ. They will provide 2-to-1 on the upside to the cap, and they'll also provide both annual and quarterly outcome periods. The shorter quarterly outcome periods will tend to follow the underlying index more closely because of the shorter outcomes, but they'll also have lower caps because they're only over a quarter. So just to review the upcoming Innovator Accelerated ETF, the offerings. So we have 3 ETFs based on SPY. We have a double on the upside to a cap with a quarterly outcome period. We have a double on the upside to a cap over an annual outcome period. And then we also have a double on the upside to a cap with a 9 buffer over an annual outcome period. We also have one new ETF based on the QQQ, and it gives double on the upside of the QQQ to the cap over a quarterly outcome period. There are 3 core benefits to the accelerated ETFs. 1, outperformance to the cap without additional market risk. The average cap of the annual SPY double has been about 20%. So investors in that ETF will receive double the upside performance of SPY to a cap of 20% with only 1-to-1 exposure on the downside. Number 2, they're designed for long-term buy and hold investors. Unlike leverage ETFs, these ETFs reset automatically either annually or quarterly and can be held indefinitely. They'll continue to reset in the years and quarters to come. Number 3, the ETF package benefits with all of its tax, liquidity, and cost benefits. Like other ETFs, we don't expect cap gain distributions, so investors can defer their taxes and compound any gains until they sell their shares. These are a few obvious portfolio applications for the accelerated ETFs. As a straight-up replacement for core equity holdings to help ensure investors meet portfolio performance goals. Number 2, as an alternative to other structured investments like notes and annuities, we believe the ETF structure is a superior investment vehicle when compared to the others because of the pricing transparency, the intraday liquidity, tax efficiency, lower costs, etc. And then number 3, replace active equity managers. Rather than depending on unreliable active management, stock selection, and timing the market, now you can rely on the potential outperformance through the built-in alpha of the structure. Thank you very much for listening to the video today. Please contact us at Innovator ETFs if you have any questions. We'd be happy to help you.